there, but let's move on to the currency space as well. It was a bearish day for most of those high-yielding currencies too. Look at the Indian rupee, that one has hit a one-week lows, and that really has been taking cues from the euro, which has slipped to more than 11-year lows into the international markets there. Let's also get in Abhishek Goenka. He is CEO India Forex Advisors, and he joins us in the studios as well. Abhishek, what's your reading on the rupee? The first day of the week, and we're down 1% and more.
Dollar is strong as always. We maintain in 2012. See that the way things are, we have to look at the US dollar is, first of all, the most important thing, we have to track what's happening in the US 10-year. You know, the US 10-year is making new low every day. We are expecting it can go as low as 1.20%, which is currently at 1.4 all-time low. The Spanish debt, if you look at 7.6 levels around the Spanish debt has gone. The 2-year debt of, the other nations like Dutch, German and Australian yield, has also come to negative. That means there's a huge risk aversion in the market. The second way to look at is the China. The way the China is slowing down, and the concerns on China, the way the prices of commodities are coming down. Obviously, the emerging markets economies like North Korea, Thailand, and all, which are dependent on China, would definitely be hit. And of course, rupee is no exception. And the third way we have to look at is that how the interest rate scenario, the monetary policy across the world is shaping up. You see, the euro is cutting rates. Australia may have further rate cuts. There's been QE seen in the Bank of England, though US is still not coming up with QE, though there are a lot of speculations in the market. So overall, if you see that everybody is cutting rates, then obviously the US dollar is going to be the clear winner. So, and the fourthly, you need to see that how the money which was getting pumped in from the European nations to the emerging markets, which were like 45% of the lending, which has drastically come down. If you don't get the money from these nations anyways, we are not going to see the stock markets going up in India. So, all these factors, if you look at into, is pointing towards the US dollar strength. So we personally feel that 56 was a level that was anticipated. Now we are looking at a new high for the rupee to come in the coming days.
Also, Abhishek, how would you look at the euro now? Because we almost are near that 1.20 level, something that we have been talking about many months now. Do you see that breaching soon?
Yeah, of course. 1.16 was the last target in euro, and we personally feel that we are going to see that. The only way the euro will see some kind of a despite is probably if there is a Greece exit. Then probably the bulls will come in power that, okay, fine, the pain in the neck, that Greece is going out, so probably we can see some buying happening in euro. But otherwise, I see that the euro is going to maintain the fall.
Vijay, what's your sense on all of those currencies as well? For the very near term, how would you want to trade a euro and a rupee?
Well, the euro, I have been talking about 1.2050 as a level to watch out for, and I would continue to maintain that. Should it go below 1.2050, I think it'll go all the way down to 1.18 pretty swiftly. And where the US dollar is concerned, it's seeing safe haven buying, so that momentum is likely to continue. In addition to what Abhishek said, there is a point which I'd like to make about the Indian rupee. On Friday, July 20th, there was an announcement in the press that the pre-shipment exporters' foreign currency credit would get deregulated where the interest rates are concerned, which means cheap packing credit will not be probably allowed to the exporters, which makes our exports even more uncompetitive vis-a-vis very aggressive competition from China. So my guess is exports might just take a small hit, which is what is being reflected in the USD INR today.
All right, Vijay and Abhishek, sorry, completely out of time, but that's the view coming in from our experts. The rupee and the euro would continue to depreciate, while the friendly US dollar index, or the currency itself, has seen much more gains in 2012. With that, completely out of time on Hot Commodities. Thank you for watching.